LBR LBO Infrastructure Summit 2016.
So good afternoon, everybody, and thanks for Lakshman LBR LBO for inviting me for this discussion. So I'm just going to share a few initial thoughts with the broader intention of setting up our discussion, which I think should be very interesting. So before I start, and I will just briefly introduce IFC, partly because Lakshman, I think, introduced IFC a bit wrong, and also I think it's also relevant for the rest of my presentation. So IFC is not owned by the World Bank. We are part of the World Bank group. IFC and what is known as the World Bank is actually IBRD and IDA that you see on that slide. And us, along with MIGA and ICSID, are all owned by the governments of the world, including Sri Lanka. But all of us share essentially one board of directors and share one president. But we are separate legal entities and having broadly our own management teams, but we share some resources like human resources and IT and so on. But it's all one brotherhood or sisterhood, however you want to call it. And as you all know, IBRD and IDA, the World Bank, supports the governments of the world, particularly the developing countries. And IFC supports the developing countries by supporting the private sector in developing countries. And MIGA, Multilateral Investor Guarantee Agency, provides risk insurance products, essentially for FDI, foreign direct investment, and ICSID works on dispute resolution and arbitration. And I'll come back to some of these aspects. Now, just get into our topic. The question is, as we look at the Western Megapolis plan, we're targeting $40 billion plus of investments. Is that right, Naina? In the span of maybe 10, 15 years. And so how can we deliver that? Where can we get $40 billion of funding? And so the first question I would like to delve into is, can this come from public funding or private funding? And Sri Lanka thus far has had a largely publicly funded infrastructure development mechanism broadly, with some few exceptions here and there in the last 20 years, and some of which I think Thilan will speak a bit more about. And our approach has been very much, we want to do these A, B, and C projects. How do we get this specific project done? Who can we tap to fund this project? Can we go for multilaterals? Can we go to the World Bank or Asian Development Bank and so on to fund this project? Or can we get bilateral sources of funding or be in the same G2G, government to government? Which government can we tap into to help fund this particular project? So it's very much focused on a specific project and finding who can we find a financier to fund that project. And I think through this mechanism, we have charted a course, since particularly 2009, we had a number of years of rapid economic growth. GDP growth for about 3-4 years was in the 8 to 10% range. The last couple of years has dropped a bit, but still a healthy 4 to 6% GDP growth. The question then is, how long can we sustain this if it's a largely publicly funded model? And I think that's where we are all pausing across the board and then realizing that we need to shift the modus operandi, because the governments and the public's capacity to fund this growth is going to increasingly come to a halt. So therefore, essentially now we need to change our model from a project-focused, publicly funded model to a different model, where I think many will believe that we need to go towards a private sector-led growth model, where the government will still need to play a very critical role in the shift, as well as the regulation, as well as the mobilization. So there's a huge role the government needs to play to in this sort of almost a paradigm shift to for Sri Lanka to continue to sustain this level of growth, and hopefully with that paradigm shift we can even jump it a notch above. So that's one aspect of it. Then the second question I pose here is the local versus foreign. So when you're looking at a $40 billion of investments, how much of that can we bring in the local market? I think if you had a couple of projects of $100 million or less, maybe we can try to do that in the local market. When you're talking billions of dollars, we will need to mobilize foreign funding. And Sri Lanka's track record in the recent past is not that great. I think each year we do less than $1 billion, if that. So we really are underperforming on this metric, and we need to change. And in my view, part of that relates to what I spoke before in terms of our development model, in terms of it being largely public sector focused and a project focused. So in shifting that paradigm. And then before we speak further, let me just quickly, at a very high level, share, as we look at various different projects to finance, as you all know, there's an equity component and there's a debt component. Typically, and this is really ballpark, 30 to 50% of the project's cost is funded with equity, and the remainder funded with debt. So broadly 50 to 70%, sometimes more. I think in instances where parties have tried to do more debt than that, things have become tricky, and things like global financial crisis has happened when things have been entirely debt financed. Not to say that you cannot do it, but you have to be really prudent and do it in really specific circumstances. So having said that, so then who are the equity investors that we can look at? And as you look at equity investors, you will have the developers for whichever the sector. If you look at a power plant, power plant developers. If you look at real estate development, real estate developers. So different types of entities who will be doing that. Often you have construction companies who actually do the construction, coming and take an equity stake, sometimes partly to be able to make sure that they do the construction. And then you have diversified conglomerates, particularly in a country like Sri Lanka. Diversified conglomerates are quite active developers across the different sectors. Then as you kind of look beyond that typical realm, as particularly you look at foreign models, you see private equity funds coming in as equity investors, sovereign wealth funds. And then you have strategic industry players. So let's say, if you take the Sri Lankan Airlines example before, you had Emirates coming in as a strategic investor. So with the idea of not only helping the Sri Lankan operations, but potentially helping their global operations as well. And then various other parties like equipment suppliers and parties like IFC, who are multilaterals, who take a mobilizing role. So I think, but one key thing I would say in terms of as you look at equity investors, a key part of it is to ensure that you bring in a equity investor really who really has money, who has deep pockets. And one of the things we see in a number of our countries that we operate in is you have idea generators coming and being sort of the equity, but really don't have the funding behind that. And that doesn't really work for the other part, the debt, because if you don't have the money to back your idea, then the debt lenders are not going to get comfortable coming in. So if you have great ideas, make sure you partner with somebody who has the money to put in real equity. And then as we look at debt, you have the typical players of local banks, international banks. Oops. What did I just do? Okay, sorry. Local banks and international banks. And then you'll have institutional investors, the insurance companies, pension funds, and the like. And then the other part is you can issue a bond in the bond market, and you'll see that in Sri Lanka, you'll see that in the international space. And then large projects can bring in export credit agencies. And then the parties like us, multilaterals. So let me just share this, and I think it's probably going to be difficult to see in the back of the room, but I think the key thing here is about credit rating, and credit ratings are important, particularly as you look to go to international markets and attract FDI, credit rating becomes quite fundamental. And in this slide, you will see Sri Lanka in the sort of bottom third quadrant, Sri Lanka's credit rating at essentially B+ in S&P is non-investment grade. So investment grade is essentially the top half of this. So India and Turkey is just above investment grade, and the rest below that. So in order to access a lot of the international funding, international commercial banks, typically you need to be investment grade or better. So, which means that all the others need to find other different mechanisms of enhancing the credit to attract international source of funding. It doesn't mean that you can't tap into any international source of funding at all. There are a number of international funding mechanisms that are available for emerging markets, but a large number of them are not. And I'll just quickly share, I think I'm running out of time, one example of how you can do that, and this is an example of a power project we did in Kenya, which has a similar credit rating or the same credit rating as Sri Lanka, where we had IFC and African Development Bank as a financier, but we were also able to bring in international commercial banks by essentially providing a political risk insurance cover through MIGA, our sister institution, Multilateral Investment Guarantee Agency. They provided the political risk insurance cover that allowed an international commercial bank to come and take this risk cover, which otherwise they typically wouldn't have. So this is one mechanism of bridging the gap in this current framework. But I think in the longer term, Sri Lanka needs to edge towards enhancing the credit rating and changing the larger economic environment to be able to attract a larger set of financiers, and for that, a strategic planning to achieve that paradigm shift that I mentioned in the beginning is quite critical. And sort of prioritizing projects, finding projects that are commercially viable, structuring them well, and attracting investors towards that. And let's talk more about that in the panel discussion. So I'll stop there for now.
Perfect, Kamal. Great. Thanks for that lovely presentation.
LBR LBO Infrastructure Summit 2016.